Welcome back to Alpha Recap. I'm so glad you tuned in. We're unpacking a patchwork market from Friday. And as always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to cover. It was a real mixed bag after the close on Friday.
So, what really stands out here is that we had pockets of strength and some pretty sharp weakness, right?
Exactly. Friday's tape was concentrated. A few big narratives drove strong gains in places like communications, materials, and consumer, while healthcare, utilities, and cannabis faced headwinds.
Walk me through the big picture drivers first. What moved markets?
There were three structural themes that dominated. First, major AI investment. Second, a fresh push into critical minerals. And third, institutional-sized moves in crypto. On top of that, a major Supreme Court tariff ruling and an unlucky clinical readout hit other areas.
And one of those headlines was huge. Tell us about that India pledge.
India announced a commitment to AI infrastructure worth about $210 billion, and that was cited as a direct tailwind for telecom suppliers, data center builders, and cloud providers. It was a headline that lifted communications names across the board.
Yeah, that's massive.
Right. Then materials. Miners and specialty chemical firms linked to electronics and batteries rallied because of active exploration news and deals. There was an announced 80% property stake in a strategic asset and new R&D targeting things like tungsten and cesium, metals that matter for electrification and AI hardware.
So supply constraints met rising demand. Makes sense.
Exactly. And then crypto. On-chain data showed large wallets added roughly 236,000 Bitcoin, which signaled ongoing institutional conviction despite the usual operational risks.
Big numbers. But not everything was upbeat. The tariff ruling changed the landscape, right?
Yes. The Supreme Court invalidated major presidential tariffs, which materially lowered the risk of sudden import cost shocks. That was an immediate relief for retailers and many manufacturers because it cut a major input risk overhang.
Tell our listeners what that means in practical terms.
It means, for example, retailers with large, import-heavy inventories may not need to pre-hedge as aggressively anymore. That easing of tariff risk can improve margins if companies don't pass all the savings to customers. On the flip side, firms that had hedged for tariffs could report one-off accounting adjustments.
Interesting. So winners and losers depending on positioning.
Exactly.
Let's break the market into the leaders and the laggards. Start with the outperformers.
Communications, materials, and consumer-led. Communications saw deal-making and AI tailwinds, partnerships, corporate moves, and product launches. Microsoft's gaming shakeup and Samsung's deal with Videotron created stock-specific catalysts and broader optimism for infrastructure suppliers.
Right, and the materials crowd?
Miners and critical mineral players rallied on real activity, drilling starts, acquisitions, and price spikes for niche metals. Investors are treating some of these names like growth exposures because the demand from EVs, batteries, and AI hardware is structural.
And consumer?
Retailers got a boost from that tariff ruling and active deal flow. eBay announced an acquisition of Depop for about $1.2 billion, which reinforced consolidation in resale. Walmart leaned into shoppable live streaming around big events. So omni-channel names with good logistics outperformed.
Short reaction.
Big move. Not what anyone expected.
Okay, now the laggards. You mentioned healthcare, utilities, and cannabis. Start with healthcare.
Healthcare was rough. A high-profile cancer screening test missed a study endpoint, and the developer's shares were materially wiped out. That kind of binary trial risk still dominates small-cap biotech. One readout can erase a lot of value.
Yeah, honestly, I was a bit surprised by how stark the reaction was.
I mean, when you step back and look at this, small-cap biotech is effectively a binary risk bucket. At the same time, larger incumbents with regulatory clarity benefited. Roche, for example, got a scheduled FDA decision date that re-anchored sentiment.
Utilities were split, right?
Right. Renewables and storage projects restarted, and private capital flowed. For instance, an investment group committed nearly $1 billion to California clean tech. But the same court ruling and regulatory reversals created uncertainty around cost recovery in some jurisdictions, so regulated utilities felt defensive.
And cannabis?
Cannabis names were pressured by tightening hemp enforcement at state and federal levels. Meanwhile, Canadian retail cannabis hit record sales. So demand exists, but U.S. firms face enforcement risk that compresses multiples until regulators clarify the rules.
Short reaction.
Yeah, that tracks.
Let's hit some mixed sectors. A few quick takes on tech, energy, finance, and crypto.
Technology was mixed. Microsoft's moves and Apple's AI features supported the AI and gaming narrative, but cybersecurity names slipped after security tool questions. Investors are differentiating between AI infrastructure winners and legacy software with limited AI exposure.
Energy.
Brent crude finished the day above $72 a barrel, which helped exploration and upstream names. At the same time, solar saw pressure from weather and module pricing. So energy had bifurcation. Big oil and upstream did okay, while some green projects faced execution headwinds.
Finance and crypto in a sentence each.
Banks had regulatory scrutiny ahead of earnings, with hedging and infrastructure financing themes in play. Crypto showed institutional interest. BNP Paribas launched an Ethereum tokenization pilot, and Wales added about 236,000 Bitcoin. But operational risks at exchanges kept a risk premium.
Got it. There were some single big moves that mattered to the tape. Say them quickly. What were the most significant ones?
The $210 billion India AI pledge, the Supreme Court tariff ruling, the roughly 236,000 Bitcoin accumulation, eBay's about $1.2 billion Depop deal, and that failed cancer screening trial versus Roche's FDA clarity. Each moved different pockets of the market.
Okay, practical investor takeaways. What would you recommend listeners consider heading into next week?
Tilt into durable AI and infrastructure exposure, but be selective. Favor communications and materials names with clear AI linkage, cloud networking suppliers, data center materials, and critical mineral producers with proven reserves or offtake deals. Be cautious with speculative miners without clear cash flows.
And use the tariff ruling how?
Revisit consumer and industrial positions. Retailers and import-heavy manufacturers could see margin relief, so review inventory accounting and hedges. Expect some companies to report one-off gains or adjustments if they hedged against tariffs before the ruling.
Healthcare advice?
Be selective. Reduce exposure to small-cap biotech unless you accept binary clinical risk. Prefer large-cap healthcare with diversified revenues and near-term regulatory catalysts. Monitor clinical calendars closely.
Utilities and crypto. Quick hits.
Differentiate utilities by regulatory exposure. Back renewable developers with private capital support over rate-regulated names facing contentious rate cases. For crypto, consider tactical exposure via regulated vehicles and strong custody solutions. Because institutional adoption is real, but storage and exchange risk remain.
And materials?
Materials can be a momentum trade when drill results or offtake deals come through. If you trade them, use stop discipline or pair trades to manage the timing risk.
Risks to watch next week?
Earnings for major banks and consumer names, new clinical readouts that could swing biotech, oil price moves relative to about $72 a barrel, crypto operational events, and ongoing regulatory rulings around tariffs, hemp enforcement, and big mergers.
So the path forward is...
Asymmetric. Lean into AI and materials where fundamentals support premium valuations. Be tactical in consumer and communications to capture deal-driven upside. And keep strict risk controls in healthcare, cannabis, and some utilities, where headlines can flip sentiment.
Short reaction.
Yeah, absolutely.
All right. Final quick takeaways for listeners, in plain terms.
1. AI investments and critical mineral activity were the day's main bullish forces. 2. The Supreme Court tariff ruling removed a major cost overhang for retailers and some manufacturers. 3. Small-cap biotech remains binary and volatile. Favor regulatory clarity when you can. 4. Institutional crypto flows matter, but custody and exchange risk still exist.
Perfect. Thanks. That was super clear.
My pleasure.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after next week's earnings and regulatory headlines to see whether this narrow leadership broadens or stays concentrated.
Thanks, everyone. Have a great weekend, and we'll catch you on the next Alpha Recap.